Hi everyone. Today markets pushed up to key resistance levels again at 607.81 and then immediately rejected into the after hours, continuing to show this topping formation. But let's take a look at the medium term charts and see if we can find some direction from there. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Looking at fear and greed, we did step up to a 57 from a 50. Interesting to see that going higher where markets are really topping out when it comes to the S&Ps. Momentum still sitting in greed, strength continuing to sit in extreme fear, and you can see this has been downtrending towards that 4% area. We're also seeing breadth break down to new lows relative to these lows that we saw in November, sitting down here almost at 1,000 on this indicator. Definitely not what you want to see. That's basically in the 50% range. Put call ratio still staying relatively depressed, still sitting in extreme greed. And you can see volatility neutral but trending higher. We'll definitely look at that on the charts later. Safe haven demand trending up slightly, still in greed. And then junk bonds taking a hard turn down into extreme greed. Moving over to seasonality, we have seen the low of the month, supposedly. We're supposed to start to see that end of year rally if it's going to happen. January effect, small caps outperforming. This is the time, again, if it's going to happen. I'm not so sure that it will in terms of the charts, but seasonally it's supposed to be bullish. And then looking at the calendar, just a reminder, it is quad witching, so you have all of those options and futures rolling over this week. And then looking at the calendar, you have a ton of data, retail sales, home index, FOMC obviously for Wednesday going to be huge, GDP on the Thursday, Philly Fed survey, and then all of the Michigan data and PCE on Friday. Again, quad witching tends to be bullish. You can see that indicator here, but the FOMC date is supposed to be a little bit bearish. Then looking at the economic calendar for today, you can see global manufacturing PMI came in at 48, worse than expectations and below the 50 line. Composite PMI and global services still doing pretty well, way above expectations here for services and way above that 50 line. So a little bit of growth there. Again, a little bit of mixed data, but US manufacturing continues to slow down. And then for tomorrow, we do have that retail sales core and headline expectations supposed to be 0.6, so a little bit of a step up on the month-over-month numbers. And then don't forget Wednesday, of course, we have FOMC, all of those interest rate projections, and the statement definitely going to be interesting. Current projections are about 97% for a cut, so highly expect that to happen. Generally a 100% indicator, and then after that, it's looking like a pause in the January meeting, at least until the March meeting. So one more cut this year, and then we'll start to see this slow down, at least a little bit, in my opinion. Moving over to Max Pain. Max Pain right now for the Friday, $575. I think that was a pretty significant step down. Current price, $604. Total options, a lot there at 4.8 million. Put call ratio, 2.29. That's gone up a little bit. Again, huge call walls here. Still expecting the S&Ps to be negative. Starting to push down into that 580 to 590 area. Maybe in here, 590 to 595. Either way, looking a little bit bearish here on the Max Pain. Getting into the charts here, looking at the S&Ps, we did have a slightly bullish day, 0.4%, but again, 607.81 continues to be the top of this consolidation. The high of day was 607.78, so we missed it by just a couple of pennies, got very close to that level, and then rejected from there, finishing pretty much in the middle of the candle. In terms of medium term, obviously still continuing to go here, but we're at this key resistance level, continuing to show slightly lower highs. And you can see that here first on the 6th, and then again on the 11th, and then here once again today on the 16th, rejecting from that level here. We're right at the trend as well. Trend resistance basically right on top of the closing price there, around 606.80 or so. Momentum did step to bullish slightly. You could argue this is a bit of a rising triangle with that topping pattern here. Maybe it does break to the upside, but looking at the short time frames, you can see it does not look so great. Continuing to hit this resistance here, the level that we added at 607.81, overthrew it slightly here, but all of these closing prices touched it again, rejected from there, made a slightly lower low from this previous low here. And then once again, lower high at the level, just missed it barely, and then rejecting into the after hours, and I would expect this to continue lower into that 200 level at 604.94. So at least another $1 lower from the after hours pricing. And remember, the closing price was 606.78, so about a $2 down move from there. Big volume on that selling candle, last candle of the day was most of the volume and selling action. It's in this consolidation zone here, 200 next level. And then you have these kind of consolidation lows here around 603, and then your trend support all the way down at 660, and then my level 595.64. So Intermediate in here, 603, next level, right around that 600 level. And then if we did get into that area, that would be a break of this most recent consolidation. And then you would expect a bounce from that level, a lower high setup. And then if we did get the rejection, lower low, that's going to be a change in structure. And that could be a longer term style move, especially based on what we're seeing here on the daily. Moving over to the Tasty charts here for a moment, want to highlight that last 4-hour candle of the day. You can see huge volume, relative volume, 2.81. Again, selling candle, big selling action into this consolidation. Still bullish conditions on the 4-hour chart, but not by much. And then looking at that hourly chart, still bullish here on the hourly as well. But again, huge volume spikes on those selling candles continuing to trend lower. So volume continues to come through on selling. You can see it here, selling action, selling candles, big volume. Similarly here, to selling candles, big selling volume. So S&P is continuing to show weakness in my opinion. Moving over to the NASDAQ. NASDAQ continues to be absolutely massive, 1.4%. Momentum very bullish. RSI getting back to overbought conditions at a 71.17. Gapped higher and rallied, pushed through this trend line here. The next trend, we're going to have to extend this out. In there, your next trend resistance is going to be up at 548.28. So we'll see if we can get this continuation push. Technically at a consolidation here, broke out, consolidation continuation. So it's a possibility, continues to be very strong. This is mostly being driven by Tesla and Broadcom. We'll take a look at those later, but NASDAQ continues to be very powerful, especially relative to its peers. And you can see that here, massive day, straight up immediately from the pre-market open, continued up nearly all day. Slight pullback into the after hours like we did see on the SPY, but very moderate pullback, especially relative to the SPY. So looks very strong. Might see a slight pullback into this zone here, and then I would expect rally out of that. And then moving over here to the Tasty charts just for a moment, I did want to highlight we did see a slight volume spike as we hit that upper ATR band. So again, might see a little bit of pullback from there. It's been a massive run. We're already at those upper bands. Generally, once you hit that upper band, we've seen it multiple times. You hit it here, pull back in time, hit it here, pull back from here, and then rallied back up, pulled back in time. Again, touching it here, might see slight pullback for a couple days, and then you would expect that continuation up as these ATR bands continue to move higher. And you can see it here on the hourly as well. Very similar move to this here, where you get massive overextension, pullback, again, massive extension, slight pullback in time, big volume on that sell candle. Nothing crazy, but overall still looks very bullish, just a little extended in the short term. Moving over to the Russell and the Dow, you can see the Russell was positive. We continue to see a slight bounce off that 232.09 level. We talked about it when it happened. We entered a position after being out of it for about a day on this big selling candle here. Got a light bounce up to the level 235.04, and the trend line here rejected from there slightly. Did close right at the trend resistance. We'll see if it can hold in here. Momentum starting to flatten out. Hopefully we get a little bit of continuation from here. Being patient, might just be a retest breakdown, but I think we probably will see a little bit of follow through, at least into the 236.80 area. RSI extended to the downside, looking for a bounce into that SMA here. And then looking at volume, you can see good volume coming through, about 32 million there on a bullish day. So starting to see a little bit of a ramp in volume on the positive trading day, which is a potential for a turnaround at this key level. And then looking at the Dow continues to be pretty terrible, honestly, down 8 days in a row, breaking this level here, continuing down to the trend or the 55 EMA, whichever we end up finding. My guess is we'll probably at least hit that 55 somewhere in here, 433, maybe even the level at 432.78. Momentum continuing to build to the downside. RSI broken down. It's getting a little extended off that SMA, so eventually we're going to see a retest of the SMA in here. Maybe we start to bounce slightly and then get the continuation lower, but either way, the Dow has looked quite bearish, and we really haven't seen the rest of markets doing this quite yet, but this is ominous for me, and we'll see what happens in this key zone down here, in my opinion. Moving over to the Mag 7, the Mag 7 continues to be strong, about 2% higher, still looking to push to this trend here for tomorrow. That's going to be 340.80, and then potentially up to the trend here around 345. If we do get that push, that's about another 1% and 2/3 there, and then if we get to the next level, that's about another 3% from here. Momentum bullish, RSI still super overbought at an 80.04, but continues to look strong, and there's probably a little bit more upside in it, in my opinion. Moving over to Apple and Microsoft. Apple up another 1.17%, new all-time high close, got to a new all-time high wick high as well at 251.38, continues to be strong here. Even with momentum fading, RSI to 78.6, so still super extended. We'll see how much higher it can go. Obviously, price discovery there. And then looking at Microsoft, got a little bit of a bounce off of that 8 EMA, but resistance still here at 453.30. We'll see if it rejects from there once again. First touch, big rejection. Held support here, waiting to see if it breaks out or not. Moving over to Tesla and NVIDIA, two very different stories here. Tesla continues to be massive. Like I said, this is really what's driving the NASDAQ higher at 6.14%. Momentum still very bullish. RSI still super overbought. Price discovery, very strong candle, even stronger than the Friday session, which was also very strong. So closed on the high. Everything says Tesla should just continue to run here. Very, very powerful. Like I said, trend resistance up here in the 580 area is really all I have. Maybe I'll do some more analysis on that this weekend, but for now, very, very strong. And NVIDIA going lower as we expected. You do have a continuation of this structure with a high, lower high, and a low, lower low. Almost touched my level at 130.35. The low of the day was 130.42, so we did miss it by about 7 cents. We'll see how it goes. Is it going to touch that level? I would guess probably tomorrow, and then we'll see if we start to get a little bit of a support hold there. That is the high from this consolidation high here. And we've seen this kind of structure before where you have lower highs, and then we did eventually push through it. But for now, this looks quite bearish to me. I would be patient. If you want to trade off 130.35, you can. I would keep a very tight stop here because structurally this is starting to turn quite bearish. 9 is below the 21, which is below VWAP. So definitely some sellers coming in here on NVIDIA. Moving over to Amazon and Google, you got Amazon going higher on the day as well, 2.4%. Again, Mag 7 continues to be quite strong. Closed on the high, momentum bullish, RSI still super overbought. Seems like markets are kind of fleeing to strength right now, fleeing to those more secure stocks. Not sure why Google's participating in that so strong because of that DOJ investigation, but markets don't seem to care about that right now. 3.5% higher, did touch the trend, started to show a little bit of rejection from there, so we'll see if we continue to break or not. Momentum bullish, RSI super overbought. You're also starting to see a little bit of divergence there. Peak RSI, pullback, lower RSI read, but you're starting to see higher prices come through here. So maybe showing a little bit of weakness on Alphabet as we get into those key levels of resistance. And I did add a quick little bit of structure here. You can see a midline, an upper trend, very, very close to that upper trend in the same consolidation. This is what we saw before through this zone, rejected from here previously, dipped down, rallied back to this area. We'll see if it rejects once again. And then moving over here to Meta and Broadcom. Meta up 0.63 in the same consolidation, momentum fading, RSI fading a little bit there. So Meta not looking super great after this bigger push here. And then looking at Broadcom, again, this is one of the stocks that is absolutely driving markets higher. They had huge earnings and then they jumped 24%. And then once again, another 11.2%, huge volume, huge momentum, hit this upper trend here. Last time we touched this zone, that was a decent top. You can see we touched that trend, pulled back about 30% from there. And now it's been a massive run since that earnings, already up about 39.5%. Then we'll see what happens from here. Is it going to pull back and start to retest some of these levels? If it does, I think that's going to pull down markets. You can see we closed at 250 flat, so big psychological level there as well. Very strong. I would guess we'll see a little bit of pullback in time or maybe some pullback in price. It's super extended, obviously, but big earnings, big numbers, big forward guide. Everything looks strong, at least for now. Moving over to staples versus discretionaries. Bearish here on staples, about 0.5%. Discretionaries continuing to go higher with Amazon and Tesla being strong on the day. Momentum bullish. RSI still showing a little bit of divergence. Higher prices with lower RSI reads, but clean breakout, closed towards the high. Everything looks strong there, at least for now. Another 1.35% on the day. Again, price discovery, who knows where it's going. I don't really have any structure. You can see this was my top trend line, at least in the short term. Grinded on that level and then continued higher from there. So very strong, at least for now. Like I said, definitely a risk on market. Moving over here to transports and oil and gas, I just want to highlight the sectors that are not doing so great. You can see transports has fallen about 7.25% from there. From its most recent high, momentum still bearish, RSI still bearish, probably still headed towards that 21 EMA there, around the 67.60 area. And then you got oil and gas, again, similar move, about 11% from top to bottom, momentum bearish, RSI bearish. probably headed at least to this consolidation around 130 back into this 128 area. It's nearly round trip this entire move. So there are sectors out there not doing so great. Tech still looking very, very strong. Moving over to RIOT and Marathon, pushing towards that 14.8. Touch that level. Momentum bullish once we get the breakout here, which I do think is going to happen. I think we'll push to this 18.7 area. RIOT, strong candle, 8%. I think it's going to go quite a bit more here to that next level. If it does, that's about a 30% move there. And then looking at Mara, strong candle there as well. Got back above this trend structure. Momentum stepping to bullish, strong candle as well, about 8%. Back above all the EMAs and SMAs. The structure is not quite the same here. You could see a high, lower high, but right now this looks like a low, higher low to me. Want to see it break through this trend here and then push to that 32.95 area, 33 area. If it does get back up to that trend, it's going to be a nice strong push, maybe even as high as 35, which gives you about a 45 to maybe 48% potential. Moving over to Breadth. Breadth continues to absolutely be terrible here. 13.44% down, broke that 28 level after touching it on the Friday session. Huge breakdown there. Definitely extreme fear on market breadth. You can see we're below all of these relative lows going all the way back to May of this year. Not great at all. Again, market's still holding up fairly well with that, so we'll see if this starts to matter here soon. So far it has not, and then you can see 50-day as well below these most recent lows here and these previous lows, and the trend, we're actually right at the wick lows from beginning of August timeframe, and at this point it seems like we're probably going to head back into this 40 area. That's been what we're looking for, and that takes you back to the June-July timeframe, which again, historically, decent time to be buying. We did end up going much higher from there, but market breadth structurally has been weakening, and this continues to be another step in that weakness. Moving over to the dollar, you can see this still kind of bull flag type setup here. It continues to look relatively bullish. Big couple of days in a row, about 5 in a row there. 3 days of pullback, still in this trading range here. As long as it stays above 106.84 on a closing basis, which it has done since the pushback here on Thursday, then that's relatively bullish, and then you should be looking for a push to the 108 area or the trend structure in here just above it over the next couple days, 108.05, somewhere in there. On the day it was slightly bearish, but into that Tuesday session you can see 5 hourly candles in a row, pretty strong, right up to the upper trend here. Again, 55 EMA, 106.9 might reject from here because that's the structure that it's in, but the medium-term charts in here definitely looking a little bit more bullish, looking for that breakout. It's above the SMA on the RSI, pulled back slightly, slight bounce here, so we'll see. Right now, I would say bullish. Moving over to the VIX, strong candle up on the VIX, about 6.5%, right to the level, 14.7, closed at 14.69, continuing to give us that push, momentum bullish, RSI bullish. We did say that this was likely to happen here. I think this is going to push into the structure and at this point up in the 1850 area. Could be just a little bit of a pop as we continue to get closer to that FOMC time frame, but for right now, looks strong right at the key level, looking for a push to that next zone, or if it rejects from here, obviously back down to the 12.75 area at least. In the short term, right now, looks strong with a low, higher low, high, higher high at this point, waiting for that breakout. And then moving over to my accounts, you can see I've made about $300 on the day, so pretty good there. In terms of positions, IWM, I rolled up into the rally, and then I did actually roll out and down just slightly. Managed to take profits and then protect myself fairly well for 234 for the Tuesday session for 84 cents. So actual buy price would be 233.16 or so. And then looking at the Qs, I did make a fairly major change. I was getting frustrated with how strong the NASDAQ has been moving and not participating in that rally as much as I should. So I did roll out here to 531 for $8 credit. So that puts my max profit at 539.14. And that is pretty much where we are already. Gives me about another dollar potential to the upside. On 200 shares is about $200 over the next 6 calendar days, but 2 of those are weekends, so it's really only 4 trading days. Okay, either way, I should be in good shape. A little bit of room before the max profit, a little bit of loss here that will come back over the next 4 trading days. Depending on what we see, still a relatively strong amount of protection. $8 credit there, $1,600 of protection if we do see a little bit of a pullback. Either way, in good shape. Trying to play a little bit of upside on the Qs, but still stay protected because the SPY does look quite weak. And once that structure starts to go, I think the NASDAQ will go with it, even if it does hold up a little bit better. If you made it this far in the video, I appreciate it. I just wanted to let you know that I am on vacation right now, so my video timelines might be a little bit weird. I will still get them out as regularly as I can, but they might be at weird times. So otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.